The climate finance landscape is complex, but one thing is clear. Trillions of dollars are needed to deliver action at the levels required to tackle climate change. By 2030, it is estimated that climate finance flows to low and middle income countries should quadruple to at least $1.7 trillion. The IPCC's last report issued a loud call for urgent climate action to secure a livable future for all. Increasing climate finance will be key. Doing so requires innovation in both funding mechanisms and project delivery. There has already been some success in developing and scaling innovative climate finance mechanisms, but key questions remain. How can larger pools of climate finance, especially private capital, be mobilized? How can we facilitate partnerships to help share risks and create climate investment opportunities? And overall, how can we innovate for climate to scale up climate finance and accelerate the transition to a low carbon and resilient economy?
We face some of the real challenges, and there are big questions to answer. Joining us now to help and answer some of these questions is Carlos Cuerpo, Secretary General of the Treasury and International Financing, Ministry of Economic Affairs and Digital Transformation here in Spain. We'll hear how Spain is adopting laws to ensure compliance with goals of the Paris Agreement, what is being done to scale up the investments needed, and the innovations supporting climate action. Let's welcome Carlos. Carlos, welcome. My first question is around domestic action in Spain. So Spain is an important player in global efforts to address climate change. So your country has adopted a climate change and energy transition law that sets out the targets in terms of greenhouse gas emissions, renewable energy, energy efficiency to ensure the Spain's compliance with the goals of the Paris Agreement. Can you tell us a little bit more about that and the actions that government is taking? Thank you.
Sure. Thanks a lot first for your warm welcome. It's actually a pleasure being here today. And as Miguel said, going back to these physical meetings, these physical gatherings is always much better for us to be able to actually do some networking as well and get to know each other, not only from the screens, but also in person. So it's a real pleasure being here in this forum where we will try, or at least you will try and go forward on interesting discussions on the two I's, no? Innovation and investment-related opportunities for climate. So I'm really sure that this will be a very productive and fruitful meeting. So let me go straight into your question. Miguel gave us previously a few sketches or a few pointers towards how the overall framework in Spain is sketched out. But let me give you some pointers also to try and figure out the overall network of different innovation strategies and also regulations that we are trying to set up. Because basically the idea is to be able to lay up the foundations to address climate change, to speed up ecological transition, but also to do this or to be able to be compliant with the Paris goals and achieve this compliance smoothly or as smooth as possible, helping our economy, our industries, our firms in this transition going forward. You said it, since the Climate Emergency Declaration in 2020, a key cornerstone of our regulation has been the climate change law. Basically, this law includes two reference points. We have a 2050 reference point, of course, aiming at climate neutrality, but we needed an intermediate point as well in 2030 to be able to somehow gauge to what extent we were really aiming at 2050 climate neutrality, with this 2030 objective of 23% reduction with respect to 1990 levels. So also considering that these targets are somehow a bare minimum so that we are able to really reach those those main objectives. In order for us to be able to operationalize these two commitments, there are two important strategies. First, of course, our National Integrated Energy and Climate Plan, which aims at basically giving everyone a roadmap for this decarbonization by 2030, so this medium-term objective. And then we have the long-term decarbonization strategy, which is the one aiming at basically providing an overall road to 2050 to reduce by 90% with respect to 1990 our emissions. So these two main objectives, quantitative objectives, will be combined with the climate, just transition strategy, which I think it was Axel who stated it first. So basically, it is key for us to be able to minimize the distributional impact of this transition. So, of course, it will be helping those most affected by the necessary actions towards addressing climate challenges. And then we have the last bit, which is, of course, the second pillar,
yes,
which is the National Adaptation to Climate Change Plan. So this is pretty much, I think, provides the overall configuration of these,
I can't really
network of initiatives or general initiatives. And then we have initiatives on the financial front as well. So on the financial front, I mean, let me quickly sketch out 4 main initiatives. On the regulatory front, there we have, of course, been very active or have had a very active role at the EU level, pushing for the EU framework for sustainable finance, which is based on 3 pillars, as you all know: the taxonomy to identify what we call the sustainable economic activities, the disclosure obligations to cover for those data gaps that are still there, and of course, finding tools to have an adequately rechanneling of resources. Then at the national level, I mean, we have, as I said, our important climate change law that foresees 2 main elements. On the one hand, we have obligations related to the assessment of climate change risks that will actually help companies better prepare for what's coming, for the regulatory shock that's coming, improving also corporate transparency, which is key also going forward. And these obligations will concern essentially listed companies, credit institutions, and also insurance companies. The law requires for them to provide annual reports on the impact of climate change risks, but also on the tools that they will implement to tackle those risks. Then we have the second layer would be on the macroprudential side, where we have basically the law also providing for the macroprudential authorities, the supervisors, together with the macropru authority, to actually provide every 2 years a report on the impact of climate change and the risk and the physical risk also associated with it. So that again, I think that basically maps out very well what's on the table right now. And then we have on the financial side a third layer, which is coming from the Treasury. I have to say it is something about which we're very proud. We were very proud of our green bond program, which we launched end of 2021. And the launching was actually a great success. Basically, we had a syndication of 5 billion euros in green bonds. And we were able to basically get a double dividend, which is a greenium. So basically savings for taxpayers, thanks to actually issuing in green instead of brown. And then we also got, of course, the climate dividend, which is that the projects that were behind these emission of green bonds have proven to also contribute to the stopping climate change. So we have even a report in our website with a specific assessment and evaluation of the impact of those plans. Then, I mean, as a last bit, I think I would also like to highlight the efforts in terms of within our general budget law, providing also for specific green budgetary lines in terms of public accounting, so that it also transpires into the general budget law, and therefore also to the regional budgetary laws, and it's also the public sector is adjusted to these changes.
Thank you. The next question, let's talk about climate and carbon finance and innovation. A lot of us here, and I think the bank as well, very interested and active in financing space, right? So my next question is 2 parts. First one, could you talk about Spain's international finance, climate finance strategy? And the second, what is the need to get financial flows to the scale that is needed to meet the goals?
Okay, these are, at least the second one is not an easy one because we hear a lot of figures around, but I'll do my best. So I think in a sense, Alfonso also said it before, it's a no-brainer that the financial sector has to adjust and undertake a series of important changes. We have to promote basically a massive reallocation of funds, and we have to be able to have the financial sector be able to bear the risks of climate change and underline technological and sectoral transformation. So this is a huge challenge. So on that, I think our policies, both domestically and internationally, should promote three main objectives. So on the one hand, we have to ensure that the financial sector is able to adapt itself while, and this is important, I think, preserving financial stability. And on this, I think an important concept that can be coined is green financial stability, because financial stability will either be green or nothing at all. So we need the green component going forward for us to be able to also get to this important objective of financial stability. Then the second goal would be, as I said before, to be able to reorient the capital flows towards more sustainable firms, investments, so to basically be able to green the whole investment strategy of the different financial institutions and the firms that are also within their portfolios. And third would be to also encourage the role of the financial sector into the transition of the corporate sector, particularly in Spain for SMEs. It's important that we also get them on board in this greening of their portfolios and investments as well. To these, basically, or in order for us to be able to put all these objectives into or on paper, also for the all relevant stakeholders in Spain, we will soon publish what we call our green paper, basically related to climate change objectives and to sustainable finance, that will be out for public consultations, that all stakeholders can also contribute to the orientation of the paper. And this will be accompanied, of course, by our international climate finance strategy. So I go now to the international side, where basically we must ensure that both domestic and international sides are coherent, so that all somehow objectives and investment drivers are also coherent and consistent, and that we fulfill our international commitments in terms of fighting climate change. On that, you might know that basically Spain, it actually was an announcement by our president, by Pedro Sanchez, on that we committed to increase by 50% to almost 1.4 billion euros a year our assistance to developing countries in terms of fighting climate change from 2025 onwards. So we're basically building on that, and how are we going to do this increase in the financing? Basically by prioritizing, of course, climate change in all our cooperation policies, in our contribution to also multilateral financial institutions. But let me try to be a bit more precise on how we will go there. So, of course, we intend to increase our pledges, specifically to seek those environmental objectives. But let me give you a few examples. We were one of the countries leading towards the creation of the Resilience and Sustainability Trust within the IMF, which is basically a fund that is used for low and middle income countries so that they can actually get into policies for building climate resilience and also adapting for pandemic preparedness. So that we have contributed with almost 2 billion to that specific fund. There's also, of course, our participation in all the main multilateral climate funds, the Green Climate Fund, Global Environmental Fund, Adaptation Fund. So Alfonso said that there were 200 different taxonomies. I don't know if we reached the 200 different funds, but maybe there is scope there for streamlining as well. And then on top of this, I wanted to also highlight an important factor that will come with the Spanish presidency of the Council of the European Union in the second semester of 2023, which is also our usual look at Latin America and the Caribbean here. Basically, we will promote an extensive green investment agenda. We will be green, digital, and social, but with a large green component as a key priority together with the Commission's Global Gateway initiative, trying to leverage also on other member states and on the multilateral development banks as well, so that we implement those important key green projects in Latin America as well. Then let me finish just by highlighting the private sector. I think it was said in the previous session, investment needs are immense. So I think there are many figures trying to estimate how much we will need to invest, but what is sure is that everything cannot be done solely by public investment. So we will need to involve the private sector and have the private sector accompany us. So we have estimates in terms of mitigation ranging from $3 to $6 trillion per year until 2050. So that, I mean, it's hard to actually imagine the figure. And then on top of that, you have to also include the investment needs for adaptation, which somehow range around 300 billion again a year until 2030. So it's an enormous amount of money. And the current level is only around 630 billion. So there's a huge investment gap there. We need to mobilize private sector investment. And I think to this end, multilateral development banks with this cascade approach, which I actually appreciate very much because I think it's the correct way, providing also technical assistance, improving the institutional capacity of governments as well. That's key. Building with more specific approaches like building local currency markets, but also providing support through blended financing and others. I think this is somehow the way forward as well.
Thank you. Let's talk innovation. That's what we're here for, right? So the event is all about innovation. And from where you sit as Secretary General for the Spanish Treasury, what are some important innovation sort of linked to climate change? What you have seen? What you would like to see? And I know we've touched a little bit in the previous panel, but it would be good to hear from you as well.
Mm-hmm. Okay, then let me just also somehow try to contextualize the question. So also with these two different time frameworks. So I think there is a study by the International Energy Agency saying that the net zero roadmap until 2030 basically is achievable with readily available technologies. So, but the 2050 one, not by far. So basically, I think that the estimation is that half of the required technologies are already here, but we're still missing half of them. So, and that's even more important for some of the industries which are harder to abate sectors somehow, like heavy industry, long distance transportation. So the challenge, of course, is there. From our perspective, from the Spanish economy perspective, I think we are very much aware of it, and we are trying to channel all these investment and innovation capacities through one of the main elements driving the transformation of our economy, which is the Spanish recovery plan. The Spanish recovery plan, basically, as you might all know in the room, is a comprehensive both reform and investment strategy, which is underpinned with the objective of fully transform our economy and basically increase our potential growth. So on that, 40% of the initial funds allocated to the plan will be actually used on green projects. So these 40% actually refers to 28 billion. So, so that we also have an idea of the huge investment, and with the specific also attaching specific importance to strategic projects, like projects on renewable hydrogen, electric and connected vehicle, industrial decarbonization, digitalization of the water life cycle, which is important in Spain as well, particularly under current weather circumstances, and of course the circular economy. What will we do now? We will top up these 28 billion with money coming from the addendum to the recovery plan, which is additional transfers, additional loans also. So, so that in the end, I think our bet towards innovation and investment within the green transition, and I think is pretty clear. Let me just also add a last point, which is again, the private financing. So not everything can come from the public again. And on the private side, within also some of the actions that are foreseen in the addendum to our recovery plan, we are foreseeing a credit line coming from ICO, which you might know, which is our financial, public financial credit institution. So where we have a green credit line foreseen particularly for SMEs so that they can, as I said before, with the help also collaboration of the financial sector, helping with granularity, helping also with their risk assessment, they can also engage into the transition, lowering the cost and smoothing also these, the impact of this regulatory change.
Thank you very much. Really impressive. Thank you very much for coming.
Thank you.
This was Carlos Huerpo. Thank you so much for joining me, Carlos, and it's been a real pleasure to talk to you. It is crucial to find innovative ways to set up and speed up the delivery of climate finance, as you can all, as we heard today. Here to take the conversation further with a great panel is the Regional Vice President for Europe, Latin America, and Caribbean of the I4C, Alfonso Garcia Mora. Welcome, Alfonso. Do you speak first? Yeah.
Good morning again. I'm great to have the pleasure now to moderate this first panel on stepping up climate finance from innovation to delivery. It's will be a great pleasure to have actually public and private sector participants, as you have here this morning and also from Secretary Cuerpo just a few minutes ago. If we don't bring together the public and the private sector to have a meaningful conversation on how to do this, this will never happen. So this is really a good opportunity from different industries, banking sector, energy sector, and public sector, both from a developed country like Germany and from an emerging market like Pakistan, to have participants that will help us to understand better what can be done. So thank you for that, and it's a big pleasure to introduce the panel. First of all, joining us virtually will be Oris Sayed Mujaba Hussain, who is the Additional Secretary of Ministry of Climate Change from Pakistan. We will also have virtually Ms. Marisa Drew, who is the Chief Sustainability Officer of Standard Chartered Bank. And here with me will be Oris, Ms. Nicole Wilk, Head of Division International Financing of the Transformation, International Market Mechanism, Federal Ministry of Economic Affairs and Climate Action in Germany. Thank you. And again, Nicole. And Mr. José Sainz Armada, the CFO, Chief Financial Officer of Iberdrola. So welcome everyone, and let's set up the space for the conversation. Very good. So let's begin by the discussion on two main things that I really would like to discuss this morning and to discuss with this excellent panel. Two things that are, one, this idea of going from innovation to delivery. How do we do that? I mean, we know the numbers, or we, as Carlos was mentioning, we don't know exactly what the numbers are, but there are huge numbers. So whatever it is, there is a clear need to move quickly and to step up. So we need to go from this, what we call from billions to trillions. No? How do we do that? How innovation can help us to move from billions to trillions, and how innovation can help us to go from a concept stage to real delivery and implementation. So for that, I have a set of questions, and I will start with Nicole. Nicole, the German government, I think that is among the largest providers of international climate finance in the world. And just this month, Germany announced that it will increase its contribution to the Green Climate Fund, one of the largest climate funds globally, by 2 billion euros. Could you talk about the approaches to international climate finance that you think will have the greatest impact and could be a scale-up? I mean, out of all the initiatives that exist, what do you think really works and can help to scale up?
Thank you very much, and thank you for allowing me to address this esteemed panel once again. Yes, it is important that we have innovation, implementation, and scalability, as they always need to be considered together when we talk about the future of climate finance. And this conference actually does this, and that is great. We as Germany are a reliable provider of climate finance that drives ambition in this field globally. And we have proven that once again with our announcement, you just referred to it, of contributing 2 billion euros to the second replenishment of the Green Climate Fund via our Ministry of Economic Cooperation and Development. And we hope that many other governments will follow suit and announce ambitious financing pledges, given the fund's crucial role in financing climate action in developing countries. At the same time, we stand by our goal to increase our contribution to climate finance annually from budgetary sources to 6 billion euros annually, at the latest by 2025. And we have continuously increased our contributions over the past years. In climate finance, it is key to continue supporting countries with grants, especially for activities that in the realm of adaptation and supporting relevant capacity in countries to mainstream climate considerations in all decisions. Additionally, we must mobilize the private finance needed for the global transformation. We all know, and you also referred to that, that the scale of financing required to limit global warming to below 1.5 degrees supersedes the capacity of public finance. It's a matter of shifting the trillions away from harmful activities and towards climate action. It is thus indispensable that we also use our climate finance for their capacity to catalyze such private capital and institutional investors to support the global transition. When you ask of what kind of approaches to climate finance will have the greatest impact, it would be those that on the one hand side spur innovation and long-lasting transformation on the ground, and at the same time those that scale up finance by bringing private financiers to the table, such as carbon markets can do.
Thank you, Nicole. Sorry, there are some technical issues. Thank you very much. So let's move to Marisa. I think that Marisa is connected.
I am. Can you hear me?
Oh, very good. And we can see you. Very good. Hello, Marisa. Okay. Welcome to Bilbao virtually. I know that you had issues with your travel, so thank you for connecting virtually, even if you could not enjoy this beautiful city. So in this initial question that I am asking, Marisa, what I wanted is to kind of set the needs and the priorities. No? How do you see the big picture of the climate finance? No? And you know that over the next 3 years, we are going to hear, 3 years and probably 5 and even more, we are going to hear a lot about private sector, the need to mobilize private capital, etc. No? So my question to you, being the head of sustainable, the chief sustainable finance officer in Standard Chartered, what is a Standard Chartered doing to enable financing for climate action? Which strategic initiatives and innovative instruments you are deploying? What do you think works better, and where are you focusing?
Certainly. Well, first of all, a pleasure to be here virtually. I am very sorry I couldn't be there in person. I did make an attempt, but sadly the forces were against me to catch my plane. In any case, I would say to start out, I've been a capital markets practitioner for 30 some odd years. And my observation has always been, if we want to scale markets, we need a set of standards that give market participants confidence, but we also need to create a shared understanding of the objectives and what's underpinning the market. And when you have those two conditions, you tend to see then capital being able to flow as long as the economic proposition is there. So at Standard Chartered, and first of all, we have made a very public commitment to mobilize 300 billion of sustainable finance by 2050. So using our balance sheet and our capital markets expertise to mobilize that capital for positive outcomes. So we stand behind that with a very public commitment, but also to acknowledge that we operate in 59 markets, many of which are the developing world. And in that respect, a lot of the policies and the standards that have been written to date have largely relied and focused on the West. So bringing that shared understanding of the developing world and what their specific considerations and needs are to the table, we think is an important component, because if we don't bring along big middle income, high growth countries like an Indonesia, Vietnam, et cetera, we won't achieve our global shared objectives. So what are we doing at Standard Chartered? Well, in the first instance, we find that many of our clients need just a basic understanding of what their climate risks are. So we have committed to undertake climate risk assessments on the vast majority of the clients that we bank. So we've done 2,000 of those to date, and we're going to do another 2,000 this year, where we do quite a deep dive, helping our clients to understand what their risks are to climate change. And then that provides the catalyst for us to go in and provide advice and how do they address those deficiencies or gaps. But we also work with those clients, and those clients can include corporates, governments, municipalities, to set up a framework for then accessing the markets in the terms and under the conditions that the markets expect and demand. So if someone is going to access the green bond market, which is now $1 trillion in volumes outstanding, they need to do it along a set of guidelines that comply with the green bond principles. So we help our clients to understand what those objectives are and then to meet those. Then over and above that, what we're also doing is spending time in a few dedicated and focused sectors where we believe that we've got the expertise to show real leadership or to move the needle and make a real difference. And I touch on those, and they align very nicely with the objectives of this conference. So the first one we affectionately call the monetization of carbon. We firmly believe that the role of voluntary carbon markets will play a very big part in helping not only to provide an ability to get to net zero, all the net zero commitments that so many people have made, but also to help many of our countries identify where they have natural capital stores that could be monetized to help them pay for their own sustainable transition. So we're hard at work doing everything from creating carbon markets in many countries. We're trading the credits. And as importantly, to my standards point, we are serving on many industry bodies and coalitions that are helping to try to define what good looks like in the carbon credit world. So for instance, we are on the board of the I4C, which is the Integrity Council of Voluntary Carbon Markets, which is just now in the process of producing a set of core carbon principles that is out for consultation. And we hope on the back end of that consultation, there'll be what I would call a universal agreement or understanding of what a high quality carbon credit looks like, which gives confidence for the markets to participate in purchasing or using those credits in a very proactive way. And what we also hope that it will reduce what is a very wide gap in what the carbon pricing is today. So lower quality credits can range from $2 per ton all the way up to the high end of the spectrum in natural credits around in the couple hundreds. And then if we're looking at new technologies like carbon capture, they can be as much as $2,000 a ton. So we need to bring that gap together to create that understanding so that those markets can function appropriately. Another area where we're spending quite a bit of time that we believe, given our market footprint, we need to help the financial markets, particularly on the private sector, express and understand is the appreciation for adaptation finance. I think many people today believe that adaptation is the job of governments from a capital point of view. And yet many of the governments in our markets don't, the capacity exceeds, or the need exceeds the capacity. And what we've been trying to do is, first of all, define what adaptation finance is, and then begin to work on a framework to express in private sector terms of how one can get a return on capital invested. So we've produced a report called the Adaptation Economy, which shows that in the developing markets, and we've done quite a deep study on a number of large developing markets, India, China, Philippines, Pakistan, and so on, that if we were to have private capital flow towards adaptation, in addition to all the good works that we're doing in mitigation, one can get a 12 times return in disaster avoidance or GDP losses by facilitating those capital flows. So I would call that little I innovation. So it's not a technological innovation, but it is trying to create a framework and that set of standards or a shared understanding to provide that capital a place to flow with confidence. And then finally, I'll touch on the notion of blended finance. And this has been alluded to by a number of the participants to date in your panels, which is when the public and private sector come together in unison in pursuit of a common or shared objective. And today, that was just a kernel of an idea 5 years ago, but today we're starting to see blended finance projects at scale beginning to be delivered. And a beautiful expression of that are the Just Energy Transition Partnerships, of which we are showing active leadership in 2 in the countries of Indonesia and Vietnam, where the public sector has committed a substantial pool of capital. So in the case of Indonesia, 10 billion from the public sector, which is matched by a further 10 billion of the private sector in pursuit of a holistic decarbonization agenda for the entire country. So ultimately, there will be hundreds of projects for the country of Indonesia as it gets to an ultimate net zero objective. And that includes early decommissioning of coal, as well as numerous projects in the renewable space, as well as the adoption of newer technologies. So that is a scaled solution of public and private together in harmony, which creates a multiplier effect and delivers that capital that we so desperately need.
The comprehensive picture of what you are doing on a Standard Chartered. We will come back to some of the points that you mentioned later, because, for instance, the blended finance is a key thing, and I know that there is a workshop in this conference that will target precisely how to use blended finance and how to maximize its use. But before that, let's go to another sector that is going to be key on the climate challenge, which is the energy sector. We know that the climate challenge will not be achieved without achieving the objectives of an energy transition challenge. The energy sector accounts for over 2/3 of the global greenhouse gas emissions, and Iberdrola is one of the world's leading energy companies, playing a strong role in enabling clean energy. So, Jose, I always call you Pepe. I don't know
Pepe,
if you Pepe. Let me call you Pepe. Let's talk about Iberdrola and the vision that you have on the green transition and what type of innovations you are really doing and you think that can be scaled up in achieving these goals.
Yeah, well, thank you. Well, as you said at the beginning, the difference between innovation and delivery is to make things economically viable. Okay, so I think that in that sense. I remember where solar panels, a megawatt was at the beginning costing like 7 million euros a megawatt, and now it's 700,000. And that makes a difference between innovating and being able to industrialize and to be able to get scale. No? So I think that you say that we are an energy company. We prefer to say that we are electricity company because energy, most of the energy is fuel, or gas emissions, and our target is precisely to reduce that. No? So at this moment, what it is clear to fight for to fight against climate change is that we need to electrify the economy. And this is the solution. And the electrification has to come through renewables. The two elements, or the big elements the big element in renewables or electrification of the economy that makes it more difficult is the fact that there is a variability. So you cannot store the electricity. In principle, you can do it through big hydro plants, through batteries, etc. But the problem to electrify the economy is the volatility. So you need to develop right now, the big challenge is how to make electricity available for everybody 24 hours a day, 7 days a week through renewable sources. And clearly today the important thing is to develop storage capacity, interconnections, and develop renewable sources that have less volatility and higher load factors. In that sense, we are talking about offshore wind. We are talking about massive investment in transmission and distribution. We are talking about green hydrogen for industrialization. and we are talking about batteries. So basically, what the private sector needs to do this is to have the governments or the, to set a framework that allow us actually to invest there and to give back the money to the people that lend us the money, because that is, if not, the whole system will not work. Okay, and there are lots of ways to do it. We are, but what it is, the key element here is that to make this the electrification of the economy to be viable from an economic and financial point of view, because if not, all the massive effort that has to be made, not only by the public sector but by the private sector, will not be possible. Okay. So the clear element here is to have the adequate conditions to be able for the private sector and the public sector to fund this massive need to change the way that the economy works by electrifying it.
Fully agree. No, thank you, Pepe, and I fully agree with you. I think that this is exactly, I mean, two of the objectives that we as World Bank Group, we are trying to help also developing countries, to really make what we call bankable projects, which is what you are saying, to make these projects economically efficient or viable, financially viable, so that we can bring the private sector, and how to generate or to create the enabling framework, the policies and the regulations to make that happen. No? So this is exactly at the core of what we want to implement at the country level. So moving to the country level, Nicole, I think that channeling resources to developing countries, as I said before, is a key aspect of the climate finance. No? How can we make that happen? How can we channel these resources to developing countries, countries that have less capacity to have those resources by their own, and therefore require international climate finance as well. No? And we see that there is a lot of innovation in this space as well, how to help these developing countries to move, but most of the innovation today is happening in developed countries, and we need to move this into the developing world, no? From hydrogen funds to country platforms, etc., using different instruments, different tools. So what are the mechanics that you have found most effective to deliver climate finance to developing countries? What do you think that can be used or can be taken as the good examples to scale up and to help developing countries?
Thank you again for a very, very important question. In our understanding of the challenge of mobilizing climate finance in developing countries, that led us to adopt a twofold approach. First, developing enabling regulatory frameworks through a variety of technical assistance tools, and secondly, mobilizing private capital by de-risking investments. In this regard, we believe that it's key that especially local stakeholders and implementing agencies are strengthened, while of course the delivery of climate finance through international channels such as the MDBs is also important in order to make use of the relevant instruments such as equity and guarantees. The International Climate Initiative, the ICI, which is the main climate finance instrument of my ministry, we firmly believe in supporting local stakeholders, which is why, as a prerequisite, projects must work with the 50% local stakeholders. Projects range from developing green taxonomies and building sustainable finance capacity of financial supervisors over currency risk hedging to facilitate international investments in projects tendered in a local currency to structure funds and blended finance vehicles with large institutional investors. Just as an example, Emerging Market Climate Action Fund with the Allianz Global Investors and the European Investment Bank. And not to forget, we fund research and development through projects such as the Climate Finance Lab. However, when we asked the question of the biggest impact in terms of emission reductions and moving investments at scale, then we need to speak about fossil fuel investments and subsidies. Currently, fiscal incentives are still pointed in this direction of the fossil fuel reliant future, and with the subsidies for fossil fuel technologies superseding the green technologies. Global private financiers as well as larger institutional investors, should pull their weight and lead the transition by phasing out their financing of fossil fuels and aligning their portfolio with the Paris Agreement. Only with a comprehensive approach that considers the development of regulatory frameworks, technical and financial assistance, and the phase-out of fossil fuel financing can we successfully close the financing gap and reach our collective climate goals. Thank you.
Thank you, Nicole. So let's move to Marisa. Marisa, I hope you are still there.
I'm here.
Okay, good. So Marisa, the easy question. Climate finance flows, we need to quadruple them by 2030. And my question to you is, what can we do to scale up finance through the financial sector? Financial sector is key. Without the financial sector, greening the financial sector and helping to quadruple the financial flows that needs to go to this area will not be possible. No? So how do you think this can be done? What are the policies that needs to be implemented, or what are the instruments that needs to be used? But what can we do differently today or tomorrow from what we are doing yesterday or today in order to make it happen?
And so I think we're beginning to do those things, and I alluded to that a little bit, where new financial models, new financing frameworks are being implemented, and these were areas that one didn't go to in the past. We heard from the World Bank today that climate is in the charter of the World Bank, not just lifting people out of poverty. And just by the very action of putting that in the charter of the World Bank, we can come together in the same project or instrument as partners to figure out where each of us adds something that the other doesn't have, that creates that multiplier effect and creates some scaling. And whether it's risk sharing, whether it is providing catalytic capital, whether it is stepping in, a very thorny issue, for instance, in the decarbonization agenda is for the developing world, how do we decommission coal quickly? Now, that's a very thorny subject because those who are in the coal industry, how do we replace that? How do we compensate? And then for those people whose jobs are reliant on the coal industry, how do we retrain them for the jobs of the future? So all of these things are part of what I would say very big picture, rather than small project specific, but when we're looking at, say, that systemic decarbonization agenda as we're seeing in the JETPs. In addition to that, I think the incentive point is a very good one. When you ask policymaking, there is no quicker way to get capital flow than when you create some sort of an incentive. So in the financial world, if we were to, for instance, continue to get capital relief, it's another version of redirection of subsidies. If banks were to get capital relief for investing in green, that makes it economically much more attractive to flow the funds toward that direction. In other cases, when we find on the ground in projects that we work on, we've got to uplift capacity in order to actually deliver the project. So when we're talking about these very large projects at scale, oftentimes we don't have enough of the expertise to deliver those projects with those who we're going to need to work with on the ground. In some cases, we have to change the laws. There are a whole host of things. But I think, once again, if you've got a common agenda and you participate together in a scaled project, you basically look at what the hurdles are and we attack them one by one. And is it a policy matter? Is it a structural issue? Is it that we need catalytic capital to jumpstart an opportunity, as the partner from Iberdrola said? Or is it somebody on the back end to provide the offtake so that we can make sure that energy per unit of production is attractive enough that the capital from the private sector can flow, because we are commercial operations, so we need to get a market rate of return for the investments that we make. All of those are pieces of the puzzle. So there's no one silver bullet solution, and it's the whole lot.
And actually, you mentioned something that is quite interesting: capital relief for investing in green assets, no, instead of the opposite, no, because sometimes we think on how to penalize those investments that are not green, yes, instead of creating capital reliefs for those investments that are green. We will come back to that as well. Pepe, on one question, because Standard Chartered is a multinational bank with, and we hear from Marisa what is needed at the country level to scale up financing. In the case of Iberdrola, you supply electricity, I'm not going to say energy, to 100 million people globally. And will be great to know more from you. I mean, you have presence in many countries, no? Both Latin America, but also Asia, part of North Africa. So what will you need more at the country level in order to continue moving the agenda and continue expanding in these countries that have, again, less resources originally than others to move in the right direction?
Well, the first thing that I think that you need is that the electricity that you produce is affordable, because these countries are not rich. So it will be a big mistake to try to create, for example, offshore wind, in a country where, they cannot at this moment pay it, no? But there are countries that have fantastic resources, sun, wind, and others. And, for example, you have the example of Brazil, where they are using these resources to produce affordable energy. So I think that for an emerging market, the country the first thing that you have to do is a model that it is sustainable and it is not expensive for them. Mm-hmm. The second thing that you have to work with them is that they have the adequate infrastructure, because countries need you need networks, and you need an infrastructure that makes the renewable production that can reach the centers of consumption. So affordable, you need to have infrastructure. You need to work in both sides, in infrastructure and in electricity production through renewable sources. The third thing that I think that you need to have is a good and stable energy policy and regulation. If that is important in developed countries and in countries that are, emerging markets, that is more important, even to make the private capital to go there. There are some other risks, but at least you have an idea that the system is sustainable and that there is an energy policy that gives you visibility, that gives you the possibility of invest. Because when you are a utility, it's not that you build something and you leave the country. It's you build something and you stay for the next 20 years. Okay, so that is very important. And I think that in this sense, there are, for example, the World Bank and IMF and the I4C. You can help us, in trying to not only giving money, but also helping us with the authorities, etc., to try to create this framework that it will be so important for these countries to succeed in the energy transition.
Absolutely. No, thank you, Pepe. And this is exactly what we try to do as World Bank Group, working on the two dimensions: financing, providing finance to private sector or to governments, but also technical assistance and advisory to both governments and private sector to move the agenda, especially in those things that are innovative and that therefore need some capacity building and, in a way, learning from best practices, no? And thinking on learning from best practices. One of the key things in our view of this climate challenge is to make sure that we learn from the good lessons that happens all over the world, no? That's why having you representing Iberdrola, Marisa representing Standard Chartered is key, no? So to hear what are the good innovations that are happening out there that can be replicated in other markets, no? That's fundamental. Don't think that this is a given. We see many innovations in many countries, but it's not easy to move those innovations from some countries to others, no? So Marisa, coming back to you, Standard Chartered, you are present in 59 markets across the world, so which is probably the World Bank has a little bit more presence, but not much more. But so it's a good set of number of countries where you can or where you see how the financial sectors are developing, how the banking sectors are developing. So tell me, you mentioned a little bit in the first question, but can you tell us one innovation, what financial innovation? Pick up one that you feel proud, that you think that the impact was significant and that could be replicated to other markets, or that you are already replicating in other markets. So which one would you pick? Maybe one or two if you want, but something that we could think, okay, this is something that Standard Chartered did in whatever, and could be implemented in other markets, but these are the conditions that are needed in order to replicate those good experiences.
One of the areas that we haven't touched on in our panels today, as we've been focusing mostly on mitigation or carbon emissions reduction, is the whole area of natural capital. And Standard Chartered back in 2014 developed with one of the first new structures toward conservation. And one of the things that we're certainly realizing is how much our natural capital helps us to mitigate the effects of climate change, whether that's healthy oceans or our forests, which sequester carbon. And so way back in 2014, we created this concept of a debt for nature swap. And this is the idea that a country that may be suffering from over-indebtedness or an inability to manage its debt capital stack could work with a private capital provider such as ourselves to create a structure whereby the private sector underwrites a restructuring and takes a portion of the discount of where those securities are trading under stress and takes that difference between par or 100% and where they're trading and puts it into some sort of an endowment to fund nature conservation. This was just a tiny little kernel of an idea back in 2014, and the total size of the first transaction was $15 million US. But that has now since scaled and been able to multiply many times over, with the most recent version of a debt for nature swap being 1.6 billion. Another perfect and very wonderful expression of a public-private partnership, whereby you have multilateral development banks providing a credit wrapper for the country. The progressive country is willing to engage on putting a portion of their debt funding in this endowment. Typically, you will have an NGO who's very experienced in conservation be there to deploy that endowment, and the private sector actors like a bank will underwrite that restructuring and then help sell it to long-term emerging market debt holders who are there to participate in the country's success. So a win-win for everybody, a private capital instrument that generates a market rate of return. It creates that long-term investment back in a country's future, which creates future jobs. It creates an environment that is attractive to tourism. And so the government wins because it's also not only helped its country, but it has also managed its capital structure. So that is an amazing example of an innovation that started small, but replicated many times over and has massive applicability to the developing world.
Thank you, Marisa. Nicole, back to you on the big ambition and the numbers that we have committed at COP. There was a clear objective, this $100 billion that we all talk about. How do you see the world achieving these big numbers and these big ambitions that we set up? And how do you think that we can keep the good momentum? What the international community can do to do it?
Making due to the commitment to provide the $100 billion of climate finance has the potential of solidifying the basis of trust between developing and developed countries, upon which the success of the climate negotiations clearly depends. Strengthening this trust is indispensable if we are to have a real chance at limiting global warming to 1.5 degrees. We hope that we will meet the 100 billion target this year, finally, and we believe this sends a strong signal towards COP28. Fulfilling the climate finance commitments also opens the door for more constructive approach with regards to the much more needed work on the shifting of the trillions. This means working with all parties to the UNFCCC on aligning financial flows globally with the Paris Agreement as specified in Article 2.1c. This window of opportunity is further amplified by the agenda to reform the international financial system, which is currently gathering momentum. It is about considering climate finance needs in a more systemic way by integrating the perspectives and needs of developing countries to the architecture of the international financial system, taking a broader view of the current economic context. The COVID-19 pandemic has further squeezed fiscal space in many jurisdictions, space which is essential for building an enabling framework for the private finance investments.
Thank you, Nicole. Pepe, one last question before we go to the last round. On the international fora and the presence of Iberdrola, you form part of many of these groups and an international climate change fora. what does Iberdrola bring to these forums? What is the role that you see, and how do you share things, and how do you benefit from those forums?
Well, I think that today everybody kind of is convinced about climate change and decarbonization, but when we started being part of this fora, not everybody was convinced. So we had to start convincing people, convincing institutions that producing energy through electrification of the economy was the opportunity to fight climate change. No? So that was an important element of our presence there, and we were in the in the United Nations, in COP, in all these things, trying to help and push. Obviously, another very important element, for us is to call for adequate regulatory frameworks. No. I think that in a lot of these places, you have the chance to talk with politicians, to debate, etc., and to pass the idea. This is a complex industry. This is an industry. The electrical industry is an industry where you invest today and you see the results probably several years down the road. And it is important, that people understand that, and this is not something that you take a decision today and you change the decision tomorrow, because it affects a lot of people. You have to do a planning. You have to do things that make sense. I was talking about infrastructure. You have to really do the things well done. If not, you're going to spend a lot of money, and this is not going to work. And I think that this is very important today, and we also want to give a technical view or analysis. For example, today everybody's talking about green hydrogen.
Right.
Do you think most of the people know what they are talking about? Probably no. But everybody talks about green hydrogen. Everybody's
That's right.
Selling huge plants of green hydrogen, etc. But you know how many megawatts, of renewables you have to put there to produce green hydrogen? What are the economics? But everybody has fantastic plans of green hydrogen. So our plan is to make sure, that people understand that we really help, trying to say what is needed in this industry, that it is very technical and it is very difficult. Obviously, another important element of participation is that there is a lot of people that say they are interested in climate change, but they are not really interested in climate change, as you know. So part of the work is to be in these institutions, in this forum, trying to fight people which are really working against climate change on a disguised way, not saying things directly, but there is obviously lots of interest today in the world. No? So, and obviously for us it's very important to support the organizations, the fora, the things, that really are for this fight against the climate change, and also, to help for the energy independence, in many countries that is very important also. No?
Fully agree. Thank you, Pepe. So let me ask one last question before we go to Q&A, because we have some questions in the Q&A coming from the chat. But one very quick question, no more than 1 minute response. Which innovation would have the power to make the biggest difference to the climate finance agenda this year? Nicole, let's start with you.
I think the biggest innovation is one that we still need to develop, and urgently so, as we need to mobilize private capital for climate finance at scale. Everyone talks about the untapped potential of private investors in general, including institutional investors, and nonetheless, we are yet to see innovation approaches that can be scaled successfully. We need to overcome the dichotomy of tailor-made instruments on the one hand and scalability on the other, to unite them to mobilize climate finance. Mobilizing private investors and their capital also means shifting their capital away from fossil fuels towards renewable. And next to making use of blended finance, on the innovative side, there are many more topics that we need to look into. Considering debt stress in countries and instruments such as debt for climate swaps, we've heard about them, as well as looking into local currency lending to avoid large currency risks for the borrowing countries. And I also believe that we should leverage the great potential carbon markets, including the voluntary carbon market, can have. Developing countries are highlighting the necessity of a reform of the financial system that considers these fiscal space limits in different forms, including the Bridgetown Initiative, which amongst other things includes the reform of the multilateral development banks. The MDBs, such as the World Bank, need to be made fit for purpose to lever public investment in a way that creates a multiplier effect of mobilizing private capital for climate action in developing countries. Too much of the potential of the MDBs currently remains untapped, which is why we have to push for more advance of the reform. Against this backdrop, the reform agenda to build an international financial architecture fit for addressing the challenges of our time, and COP28 there has a potential of zeroing in those effects to mobilize the levers for systemically shifting financial flows.
Thank you, Nicole.
It was a bit more than I did, but I hope it was worth it.
No, very, very. Pepe, innovation for this year that can make a difference.
Well, I think that we are already seeing, and I want to say that we are seeing this year and starting last year a much bigger involvement of the export agencies, of the I4Cs, etc., really entering into the market. Supporting this thing. I think this is changing, at least for us. The biggest change is being that one. No? In a moment in which we saw, the banking sector and the markets a little bit more doubtful with this situation, we have seen, and this has been the biggest change in this year and last year for us, has been the involvement of export agency, multilateral agencies, etc., into this funding of financing, the finance agenda, and I think that is very good, very useful, and I think that you are doing a great contribution to the possibility of the energy transition.
Thank you, Pepe. Marisa, one innovation from your side you would like to
So if I were going to give you a market innovation, I would say it is the coming together of the voluntary carbon markets. This has been a long discussed and debated and somewhat in some cases contentious area, but I think now we're on the verge with the carbon principles being out there, and I think a broad agreement by a whole host of stakeholders, public and private, who are endorsing this. So once we get a common agreement, then we can vet the projects, create that I would say that stamp of approval, if you will, of best in class. And then I think the market confidence will flow, and that's a game changer for the mobilization of capital, both for developing countries who can then monetize those credits, but also for the new technologies and then the markets themselves to fund their own hard to abate net zero programs. So that would be my one.
Not a small one. Thank you. No, great, Marisa. And we don't have too much time, so I will try to conclude wrapping up the main ideas. The questions that came from the Q&A, I think that you have responded them because they came at the beginning and was around concessional finance, what needs to be done, innovations, carbon markets, etc. And I'm sure that during the conference we will have more time to talk about it and to talk how to achieve those big numbers. No? Carlos was mentioning this morning around 6 trillion, 9 trillion other estimations per year that is needed to invest until 2050 in order to achieve the objective. So this is, in any case, a huge number where the private sector has to play a key role, as we have said, where the MDBs need to step up and continue. I4C's investing this year $10 billion in climate finance, which is a historical record, but of course it's a drop in the water, in the ocean, I would say, given the needs that exist in the world. And the role that the global banks and institutional investors have to play is absolutely fundamental. We know that they have 900 times more capital and capacity than MDBs. So the idea of how MDBs and development finance institutions can catalyze resources to open the market for all these global institutions, global banks, institutional investors to invest in these sectors will be critical. No? And there, let me probably summarize in 3 big ideas that I think that have been discussed this morning and in this fantastic panel. No? One of them is the enabling policies and standards, and Pepe was mentioning, we need the regulatory frameworks, we need the policies that can really be conducive and can make projects bankable or economically viable. No? And as I mentioned this morning, we have 200 frameworks to cover sustainability across 40 countries these days in the world. No? And this is too many. This creates huge problems in terms of defining one specific asset class, in terms of defining where institutional investors can invest part of the savings that they get, etc. No? So, and this is totally essential to create these taxonomies, standards, to avoid greenwashing. That we believe that is one of the key risks, reputational risks that we can be facing these days. No? You know, I4C has participated in many or in some initiatives in Latin America, especially together with the World Bank, trying to define taxonomies that can be incorporated across the financial and economic sector, and more needs to be done. No? I also think that the experience, for instance, with green buildings and shared standards on how to make sure that buildings are constructed, are done in a way that are energy efficient is fundamental, because it also gives us the standard for the another part of the private sector that is going to be fundamental. No? Again, the example of Colombia from I4C is a good one that we implemented, and now 20% of the new builds are certified green across the country, which is a very big number compared to 1% that was the case in 2017. But I think that governments have a key role to play, as we mentioned before. There is one piece that we haven't discussed this morning, but that is of course critical, which are all the subsidies that exist in the economies, especially in developing markets, that creates many distortions in the use of and in the cost efficiency of the use of energy, and creates many distortions. No? And I think that this is going to be fundamental, the use of public resources, enabling reforms such as carbon taxation, mandatory standards, sector reforms, tax incentives, public infrastructure investments, or guarantees. No? A second big piece that, in our opinion, in my view, will be critical is the need to expand the rates of innovative climate finance products. No? I mentioned a little bit this morning in the panel, in the opening panel, of what was needed and how to tailor these instruments to the objectives that we want to achieve. No? We started with green bonds back in 2011. Iberdrola was one of the main issuers in 2014, I think it was. Now we have trillions of dollars of green bonds, both public and private sector in the market, which is great, but we need more. And that's why we developed the taxonomy or the principles for the blue bonds, which is a typology of a sustainable bond as well, but instead of focus on green assets, focus on blue assets, focus on water, focus on fisheries, focus on pollution, focus on water sanitation, etc. Another type of instrument that can really help us to mobilize institutional investors and financing all over the world. No? And the sustainable linked bonds, that in our view is a key aspect to really focus or to really target specific outcomes that companies can achieve with the interest that investors may have on where deciding to allocate the savings. No? So instruments, biodiversity bonds are coming. So I think that there are many instruments and we need to keep on innovating, but the creation or setting the standards, as I mentioned before, is going to be critical to avoid the greenwashing. And probably the last point that I wanted to mention, which we also mentioned this morning and as a summary of the panel, is how can we continue focusing on creating bankable projects, how to make sure that when we define this type of regulatory frameworks and policies, they are conducive to create the bankability of the projects that are needed. No? I mentioned this morning that the structuring these projects in many cases costs 15% of the total infrastructure project in developing countries. 15% is a very big number, and therefore there is a clear need to make it feasible, to create standards, to allow or to rely on MDBs that can play a role, as well as Nicole was mentioning, not just financing, but also setting the ESG framework, doing the due diligence, etc., that can catalyze and bring and mobilize private capital. No? And the use of blended finance, of concessional finance, I believe that is going to be critical, it's going to be fundamental, not just to develop new technologies, as green hydrogen, for instance, but also to make sure that in countries where we have to introduce these new technologies, there is always a first entry cost. And this first entry cost, we need to use concessional finance or blended finance in many cases to make it feasible. Otherwise, we will never get there and we will never achieve our goals. So the obstacles are huge, but I think that the interest is also huge. And therefore, what I hear from the panel, public and private sector, is that the willingness to really achieve or to the green opportunities are there, and the need to really make sure that innovation and delivery comes together is a big challenge, but something, a gap that we can really help to fill in, and that I hope that conferences like this one will continue to help us achieving. So thank you very much. Thank you for your attention. Thank you very much to the panelists. It was a very comprehensive and good discussion, and I hope that you can enjoy the rest of the conference. So now back to Miriam. I don't know, Miriam, where she is? Here she is. Thank you very much.